Good morning or good afternoon. I have to say that all the time. If you're on the East Coast, thank you for joining us. Broadband Breakfast Live Online. Today is Wednesday, April 15th, 2020. I'm Drew Clark. I'm the editor and publisher of Broadband Breakfast. And we're happy that you've joined us here for our weekly Broadband Breakfast Live Online on broadband and the coronavirus, how broadband is providing solutions, how it's connecting people, and also some of the challenges and issues that we are dealing with, all of us individually and our companies and our country, even our world. Today, we have a really great topic. We are going to be discussing the impact of COVID-19 on the investment climate surrounding broadband infrastructure. We've got a great group of panelists who I'll introduce in just a second. Before I do so, though, I just want to say a couple words up top. Obviously the pandemic continues. It's just kind of everyone seems to be in a hunkering down mode. Certainly myself. I'm based here in Utah, although ultimately I plan to make it back to Washington D.C. The numbers are just daunting. I check in before our webcast every week. More than 2 million people have been infected, confirmed infected globally. 609,000 of those, nearly a third, in the United States, and the U.S. also, rising, of course, in its share of deaths from this, 26,069. And we don't really know the end. That's kind of what makes this so unsettling, right? What are we going to be doing? When is life going to go back to normal? We don't really know that. All we know is that there are tools that we have now that we didn't have 102 years ago in the last pandemic of this scale that I'm aware of, the Spanish flu pandemic. And because of that, some aspects of life have and do continue, right? And that's really what I think gives a unique opportunity to those of us in the field of broadband, how we can use these networks to communicate, to interact in our civic life, in our work, in our communities, healthcare, education, et cetera, et cetera. This event is one of the highlights of my week. I hope you'll kind of continue to join in. We plan to stick with the schedule every Wednesday at 12 noon. And today, again, we really want to drill into the financing impacts on networks. And so with that, I'm going to go ahead and turn to our very expert panel here. We have Jonathan Chambers. Jonathan is a partner at Connexon, and he will talk a little bit about the work that he's done and continues to do with electric co-ops and others who are getting fiber and high-speed broadband to rural communities. Jonathan has an extensive background and worked at the Federal Communications Commission for many years in the Obama administration, and has really, just been known for his outspokenness and his knowledge of broadband infrastructure and the environment that it can enable. He'll be followed by Jeff Christensen. Jeff is the CEO of Entry Point Technologies. He's also out here in Utah, I believe. Aren't you? Well, he's muted right now, so you can nod there. And Jeff will tell us a little bit about his business and the work he's done with cities on high capacity broadband networks. And we're also super pleased that Mike Falloon can join us. Mike, thank you. And we're really pleased to hear from Ready.net. And you can tell us more about this new entity and the type of work it's doing. So with that, let me go ahead and turn it over to you, Jonathan. I'll make sure we get you big here, and talk to us a little bit about how the coronavirus has changed the landscape that you're seeing and working in right now.
First, thanks, Drew, for inviting me here. Good to be with you and the others on this call. I send my best wishes to you, your families, and your co-workers during this time. I'd say for us, the coronavirus has highlighted something that we've been engaged in for years now, which is we do one thing. We work with rural electric cooperatives, building fiber to the home networks to every member of these electric cooperatives. And it's work that's been fulfilling over the years, really vital work, we think, something that hasn't been done in this country, hasn't been done generally anywhere around the world, which is we build fiber to the home networks regardless of population density. We'll build down to, 1 home per mile. We build wherever there are electric co-op members. The average density of an electric co-op network is 6-7 homes per mile, which means, and so that's average, which means every electric network has those last miles along the feeders of an electric network down to 1 and 2 homes per mile. And so we've been doing that work for quite some time. We construct these days 2,500, 3,000 miles of fiber every month. We'll be constructing 4,000 to 5,000 miles a month by the end of the year, and I expect somewhere around 10,000 miles a month by next year. It has been vital work, never quite as illuminated as the work we're doing today during this time. And I haven't noticed any real difference. It's not a difference for us, the current time period, in terms of need, in terms of the activities that we undertake in constructing networks. But I'd say one thing is different. I've spent a lot of time in the last 8 to 10 years explaining to people the necessity of real broadband networks. And I'll define my real broadband network as fiber to the premise, fiber to a home, fiber to a business, fiber to a school, anchor institution. The transmission medium that we believe in is fiber. And typically, if I'm talking to the management of an electric co-op, to a board of directors of an electric co-op, which is comprised of the members voted on by the members, comprised of people from the community. I'm in the past, I've been explaining a business that they're not familiar with because they're in the electric business, but also a type of service that many of them haven't had. And in the past, it's been, depending on where I am or who I'm talking to, the level of explanation, like why homes need these types of services, 100 megabit per second services, gigabit services. I've in the past spent a lot of my time explaining the why. I think in the last 4 weeks, I haven't on any occasion had to explain the why to people. Now all of the discussions are about how, and that for us is a shift. There is a recognition, and I don't expect a recognition now to have. I don't expect to have to go back to the why. Not now, not in the future, and that's a pretty marked development, I think, in what all of this has caused us to do. As we're all in our homes, working from home. Our kids are schooling from home. People are getting health care when they can from home, and every aspect of our lives is not just touched by the lockdown and the quarantine and the coronavirus, but our visibility into the rest of the world is more and more apparent by the interconnectedness of society, and the way we touch each other these days is more and more through these broadband networks.
Thank you, John. A wonderful, if sobering reflection on how this has maybe changed the perception of broadband, the why, as you describe it. You said in your remarks a little bit earlier that you haven't really noticed an impact, but in discussing the 25 to 30 to 3,000 miles a month that you're now at, just two questions. Has the construction pace been impacted just by again, the circumstances we're in? And if it has, are you kind of expecting that to catch up over time? Again, no one's got a crystal ball. Just what are you kind of seeing and estimating? And then secondly, on the kind of the financial piece, has those that were in an earlier stage, not yet at the construction, but kind of, hey, we're kind of getting our ducks in the row to get this network built. How have those projects been impacted by the current pandemic crisis?
So our construction pace has not changed. It's we always set a pretty quick construction pace for projects we work on. Typically, wherever we are, we're going to build about 1,000 miles a year, but the pace is more driven. The way we think of pace is not how many miles, even though I've just said it several times. It's how many connections you can make, how many drops and installs, how many of the co-op's members are getting connected, and that's driven by their demand. That too, I don't know that it's changed. We go as fast as we can go. An average co-op is going to connect 100 or 150 or 200 members each and every week over the course of these construction projects. We work with a co-op in Oklahoma that in the past month installed over 1,000 of their members in that month alone. And I think that was a record month for them. So I'd say the pace, we go as fast as the demand requires us to go, which is usually a pretty fast pace. As far as future, I'll make my one plug and I'll come back to it at any time. There's a lot of pent up demand to build fiber in rural areas. There's one thing that nearly everyone is waiting for right now, and that's the execution of the Rural Digital Opportunity Fund auction, which is scheduled to occur this year. I filed some information with the FCC last week indicating that we had I had a letter that was signed by over 70 co-op CEOs that said as soon as the Rural Digital Opportunity Fund gets underway, they will begin constructing fiber networks. So there is a pent up waiting for one thing. That one thing is the RDOF.
Yeah. Well, and that is an excellent linkage, because that's one of the kind of vectors we certainly want to speak about, the government and the role of the government, not only in the immediate sense of immediate plans. Obviously, RDOF preceded the coronavirus, and it's going forth. October 22nd is the date that it's scheduled for. And the law firm I work with, Com Law Group, has just announced a webinar on how to prepare for the RDOF. So it is a great reminder that that is exactly something that people are waiting for, certainly in your focus there with co-ops. We'll keep you in this discussion, but let me turn now to Jeff Christensen. Jeff, tell us a little bit about Entry Point, what kind of company you are, and what kind of networks you see as vital and important. And then kind of, after a good discussion of that, you could talk about how you see the coronavirus impacting the pace of the networks that you've been working with.
Thanks,
there you
Drew.
go.
Thanks. Yeah, thanks. Thanks for having me on. Good to see Mike again and to listen to Jonathan. Entry Point is probably a little unique in this space because we're a software company, and we're not a construction company. We're not an engineering firm. Our focus, we do some consulting work to make networks happen, but our core business is software. And the platform we've built is an open access platform, and it's really geared around, open access traditionally has the notion that multiple ISPs are available across the platform. And that's core to what we do, but really our view of open access is that it's open to any service. And I think where we're unique is that we're probably still the only software-defined open access and platform, at least in the US.
Jeff, forgive me. Let me just
Yeah.
invite you to explain open access generally, like just from a high level. How is this significantly different from the types of networks we generally see in the United States?
Well, I think everybody knows the typical networks, the 90-something% of the networks in the US have one ISP option available across that network. And open access, these networks are common in Europe. There's been a few successful networks in the US where the subscriber has the choice of, I think Utopia probably has the highest number of ISPs, which is 13 or 14. So the notion of open access is that there's some choice for the consumer on the number of ISPs they can get to. In our world, we're driving to automate all of that. And so for our networks, people can switch their ISP on demand. The ISPs are in the cloud. And the idea for us is that we separate infrastructure and services. And, we quote Scott Shanker and say, everything interesting will happen in software at the edge. So that idea that everything interesting is going to happen in software at the edge is fundamental to the way we built our platform. And so part of that is that you can switch your ISP on demand and you'll have choice. Part of it also, though, is that the open network it's open to innovation. And so we believe that over time, the whole idea of what an ISP is will evolve as automation comes to bear on the kinds of things that an ISP does. So it's open to innovation, it's open to multiple ISP services, but it's also open to any kind of service that the consumer wants to access, and open to the consumer doing things over the top or doing things on demand in private networks. So some things make sense to do over the top, other things don't. Public safety things don't make sense over the top. They require more privacy. We think as we enable telemedicine, for example, to happen in private networks. So my son-in-law is doing a fellowship out at Stanford right now and focused, he's in the COVID clinic testing people. And he says the HIP has basically gone out the window of necessity during this period because, Zoom kinds of connections are common as we go through this quarantine period. And the expectation is that as the crisis subsides, that the regulatory environment will come back in. So in our world, we give the consumer a virtual wire, and because it's all in software and it's happening at the edge, we can take that fiber optic strand, and we agree 100% with what Jonathan was saying about fiber is the media. We can take the single fiber optic strand and we can virtualize it, or we can slice it into, whatever number of private networks are needed for whatever number of services the consumer wants to consume. So that's our core. When we talk about open access, we're not just saying you have multiple ISPs. We're saying whatever services the consumer wants to access, we can deliver those on demand in software.
Have you seen any particular instances of those kind of private networks or within the networks kind of that have come to light in recent weeks because of COVID-19? Or is that still more kind of a possibility and theory than practice, Jeff?
Yeah, I mean, it's not. We're at the leading edge of this, and so as we trend increasingly to smart city IoT kinds of applications, there's a small percentage of the population that can even. We have SD-WAN, which businesses access and which they're familiar with. But it's really anchor institutions and commercial entities that can access a private network, and they're not affordable they're expensive.
Right.
What we're doing is we're democratizing that. So we're making them inherent in the platform, and they're free. They're free on the platform.
Yeah, no, you've got such an interesting story and model. Before we open it to the rest of our panelists, though, Jeff, just speak briefly about the impacts, as far as you can see them now, of the coronavirus on the appetite for demand, on either the networks that you're already involved in or the networks you hope to be involved in. What are some of the issues that you see or already have seen kind of come into play?
I think we're sort of in the thick of it. What we're seeing so far is that the larger the city, the more complexity they've got and the number of issues they've got to deal with. And so the bigger cities that we're working with, they're very focused on virus-related issues, and they've hit a pause button on their broadband project. Some of the rural groups, we're working with a rural county in Arizona, and they're going faster because of the virus. And they just think the urgency is more apparent and more relevant for them. So I think it's a mix. I think it varies by size and the resources they've got. But I do think right now the bigger cities we're working with, they're very focused on virus-related issues. But they think it will accelerate long term. It will accelerate their focus on broadband. I think everything John said is correct. That long term, and I mean on a 12-month horizon, people really understand why not just a network, but a reliable network with big capacity, low latency. People really understand why that matters now.
Okay, awesome. Well, wonderful. Thank you, Jeff. Let's go ahead and turn to Mike. Great to see you again, Mike. Tell us where you are, and obviously we've interacted. Appreciate you being on panels discussing rural broadband in the past. Tell us a little bit about what you're doing now, what ReadyNet is, and kind of your view of the landscape as it is at this moment.
No, thanks for having me on, Drew. Appreciate it. Jeff, nice to see you again. Jonathan, pleasure to meet you. Ready was launched 3 months ago by Jace Wilson and myself. We took a look at the landscape, the digital divide, which we're passionate about closing, like everyone else on this in this meeting. And we thought, how can we do this? What is the fastest path to seeing millions of Americans connected? Millions and millions of Americans connected. And we made a decision that the way to do that is really through what we characterize as the local ISP. And the local ISP is what it indicates, which is small business, small ISPs. And you're probably familiar with a host of them that you interact with who have less than 500 employees, have been around for 10 or even 20 years, but have struggled with really reaching escape velocity and growing those networks. And we said, okay, well, we'll help on the software side, revenue management, be able to acquire, retain, and monetize those subscribers, helping on the software side. And then, of course, in my opinion, most importantly, helping with finance. Because like so many in the broadband space, we're used to grants, we're used to potentially using municipal bonds, or bank finance, which is even harder to get. And we thought we would open up our network to local ISPs on the private equity and private capital side and work with them to create a program that is appealing to private lenders and private equity. Oh my, what an interesting time to get started. Like I said, we launched in January, and then in March, we're having earnest conversations. And we have the benefit of interacting with ISPs who have never been busier. And now the greater mass is realizing how important the work they do is. And then on the other side, we get to interact with the capital allocators, some of the biggest names in the private equity and private debt space. And to say that there was a pullback in interest would be an understatement. When the market started to really fall out of bed, if you will, in mid-March, things froze, and the conversations hit a big pause. because people wanted to understand what the landscape would look like. And then I don't think it really hit the mainstream media, but one of the things that has occurred over the last 7 to 10 days was really the Fed stepping in to start buying first corporate bonds to unlock the credit markets. Then they started buying municipal bonds, high yield bonds. And with that, you saw the stock market valuations start to rise again. And the conversations with the private capital allocators have resumed. Now, in speaking with them candidly, they are cautious. Right now, infrastructure funds are sitting on $200 billion in what they call dry powder or cash, and that they've raised over the last 2 years. And what they've pitched investors is they need to allocate that money within the first 3 to 4 years. They'll invest up to 7 to 10 years. So they have money to invest, but they're going to really need, I don't want to say the all clear, but some confidence that the economy is going to stand back up. When they see that all clear, I would expect money to flood into the telco space. Now, getting it into the last mile space is something that we can talk about in greater detail, because that presents its own challenges. But framing that the right way, getting the right demand lined up for those private capital allocators is of the utmost importance.
Mike, let me ask you a question. We've kind of framed this discussion around infrastructure investment in a time of COVID-19, governments, angels, or capital markets. And thank you for kind of getting us into this topic in a really key way. Your own experiences, right? I mean,
Yeah.
It's a weird best of times, worst of times story, because everyone understands the value and need for these kinds of networks, and yet there's so much short-term uncertainty. And I appreciate also walking us through that 7 to 10 day period. So just talk a little bit about governments and the capital markets, and maybe also again kind of angels or other approaches. Like, where do you see the kind of maybe let me frame it this way. Jonathan spoke about the role of RDOF, government funding, and the importance of that. Do you sort of, agree that's crucial, or talk about the capital markets end of things and their willingness to step in and fund these kinds of networks that you and others are working on?
Sure. So you've seen this massive monetary response by the Fed to step in and really take care of the liquid markets, which makes it, in liquid markets being the most critical one, which is the credit markets. It's not the sexiest one like the stock market, but the credit market ultimately determines the cost of capital. You've seen them step in and support that. On the fiscal side, obviously we saw the CARES Act pass, 2.2 trillion, and a lot of people are like, wow, that's a lot. Well, America's GDP is 21 trillion. And if I think about America like a startup, a pre-revenue startup, where there's currently no revenue coming in because everyone has, well, it's obviously not no, but it's been significantly hampered. But let's say we have no revenue coming in. A $2.2 million package covers about 5 weeks of burn. So if the economy doesn't open soon, they're going to have to pass a similar package. And in that package, there could be more amendments for broadband. But the RDOF is, you can't understate the importance of it for rural broadband. And Mr. Chambers knows that space far better than I do. But what we're seeing with CAF2 money and some of the conversations that we're having, which I expect to be similar with RDOF, is that funding can be married with private capital in order to make that money do even more. Really to leverage those grant dollars on a factor potentially of 3 to 1, 4 to 1, 5 to 1 in some of the math and markets that we're looking at. There's real potential for private allocators, whether they're private equity firms or angels, to come in and give them the assurance that there is a risk tranche here, a lower tranche, which is the RDOF, which is the federal grant money, that will catalyze their investment.
Great. Let's broaden this out. Jonathan, I'd love your take on what Mike has just talked about in terms of the markets and the reaction. Then we'll turn to Jeff.
Yeah, I think the point that Mike was just making is exactly right. This isn't RDOF, and the nature of FCC funds, which are not, so they're not grant funds, they're subsidies calculated to provide for areas that are high-cost rural areas which lack density, to provide them with revenue over a period of time until they can sustain themselves. As Mike was just saying, the leverage issue is our experience in the Connect America Fund auction, and we participated on behalf of 21 electric co-ops. We collectively won $186 million in the CAF2 auction, all for fiber construction, all for fiber to the premise construction. I one time added up the amount of investment that the co-ops are making alongside that $186 million. And the leverage there was somewhere between 5 to 1 and 10 to 1. It's about $2 billion worth of projects covered by that $186 million. A lot of that is just outside the areas where the money is. So that's why I'm giving you a range. And then I think that's the critical point. These aren't, they're not bailout, handout money. It's investment alongside other investments. It's also not CapEx reimbursement money. It's money that's meant to be a bridge between when you start a new infrastructure project in an area before you get enough subscribers online, to give you that bridge so that by your third year, fourth year, fifth year, you'll build up subscribers and that project is sustainable on its own. It's also one point about RDOF, there's no new appropriation. It's the nature of the way the FCC Universal Service Programs, there's no congressional appropriation. Not a $2 trillion appropriation, not a $2 billion appropriation, not a $2 appropriation. There's no new money. And what we've called for is a modest acceleration in the RDOF process. We believe, I mentioned before, working with between 50 and 100 co-ops that are ready to go today, would start new construction projects today. I'm not even talking about an acceleration in the auction date, the October 22nd date, but allow those who are ready to construct right now in April, in May, but for waiting for this process to play out. And even though in some cases you don't need the funding to get started, it's a part of what Mike was saying. With the funding, you have certainty of a 10-year revenue stream that makes it easier. If you're making a private investment, makes it easier to convince people that you at least have this revenue stream over the course of 10 years.
So
electric cooperatives who have to make this decision, they are assured that they're getting federal funds. It's over a 10-year period of time. It gives them that assurance that allows them to make that step into investing their own money. And like I said, in their cases, it's their own money.
Yeah.
It's the money of those members in the cooperative.
Let me just try to be clear on this, Jonathan. What exactly is the clarity that they would want to, they're ready to go now, April, May, what is it that you're saying they could get from who? FCC, Congress, that gives them some greater surety?
Right. FCC, Congress. The FCC could do this. The FCC is on its current timetable. And I'm a fan of the RDOF, as you can tell, and I support what Chairman Pai has been trying to do with this. The FCC is a bureaucracy. I used to work there. They move as quickly as bureaucracies move. In the FCC's case, I think it's a talented group of people, really an expert agency. They move as quickly as they're told to move. The acceleration that I talk about is to allow folks to indicate through what's called a long form application. This is the post-auction work. Let us do it now. Let us get set up to receive funding immediately upon the conclusion of the auction. Let folks identify. In fact, I've gone one step further in my proposals, which is, I think the auction will occur this year. I think the FCC will keep to its timetable. But they
Yeah.
just recently slipped one of their other auctions. I don't think we as a nation can afford to slip this auction. But there's a lot going on in the country right now. And the FCC is busy, and they're trying to do, typically the FCC tries to do 60 or 70 things all at one time by a same small group of people. I'm concerned that this auction will slip. So mostly what I'd like is some kind of a fail-safe backstop in case this auction doesn't occur this year. I would want those companies that are prepared to begin construction projects to help boost rural economies as we come out of the current recession, as we come out of the current downturn, to boost rural economies with construction by adding some certainty that the auction will either take place this year or the FCC will accept in those long and short form applications those who would get their funding if they can't meet their own dates. Because if the FCC slips the auction past this year, man, it's ollie ollie oxen free. It could happen at any time. It may not happen for 2 years. I want certainty that it will happen. That's the certainty.
Got it. No, thanks for clarifying that. You're really kind of talking almost in an eventuality, making sure that they can go forward even if FCC deadline slip. There's more I want to say about the auction process there and kind of the pluses and perhaps minuses of the two 20 billion over 10 years, 2 billion a year that's going out through RDOF. But I do want to get Jeff's reaction to some of the points Mike and Jonathan have just made here, just in regards to the broader economic, fiscal, and other perspective there.
So, our view is that it is this problem, this financing problem, and Mike's an expert on this, that is the thing that's holding back. So I do believe if money can flow to projects, then the whole country will get fiber over the next, I'm going to say 10 to 15 years. I think it would happen faster than we might expect if financing is available. And so we view that as the biggest constraint. And when we work with cities, we work with counties, having conversations with a couple of state level groups and private developers. I think there's a lot of talented, good business model groups out there that will function as a developer of projects if the capital is there for the projects. Reasonable interest rates. And so, what we think is that there's not enough conversation about, is this essential infrastructure? We kind of, COVID tells us strongly that it is, but there's not enough conversation about, are we going to continue to sort of treat this as something that's evolved out of the cable and telecommunications space, and it's sort of this thing over here on the side that's not essential and not a utility? Or are we going to rethink that? And, we've got the top guy at Washington State's Department of Education saying this is essential, it should be utility infrastructure. I think we've got that mentality in certain cities and maybe even in certain states. But as that blossoms and grows, I'm hoping it will as we come out of COVID, then I'm hoping that solving the financing problem becomes easier, because whether it's private capital or grant money, just a recognition that this is infrastructure we have to have.
Right. But I mean, you're kind of making a point perhaps beyond Jonathan's, right? Jonathan's saying he doesn't have to explain the why anymore earlier in his remarks. You're saying, well, yeah, but people still kind of default to the old view of infrastructure. You had a piece in Medium just a couple of days ago, Jeff, where you emphasized there needs to be something quite different. And you're talking there about open access, aren't you, Jeff? Or are there other points you're saying kind of need to help rise to the level of something different needs to happen?
Well, the points I made in the Medium article are, we need to start with fiber, which is the point Jonathan made. all of our networks should be fiber optic. Wireless has a place in the access space, but the base infrastructure should be fiber optics. Our own bias, and it's a pretty strong bias, is that we should have symmetrical networks. And you had a really nice piece on that, Drew. So we believe strongly in symmetrical networks. We are sort of an outlier in that we believe in Ethernet networks as opposed to shared networks. We as a company don't focus on PON infrastructure. And
the passive optical networks that are some of the fiber networks are built that way.
Yeah. So just in terms of infrastructure, those are some core elements that we believe in. And then obviously we have a strong bias towards open access, and open in the sense that we can, if we just take the technologies that exist in the data center, which are automation, virtualization, and apply them in software-defined networks and apply them to community networks, city networks, co-op networks, then we can do a lot more with this technology than is happening today.
Well, let me just push you on that, though, particularly in the financing crunch we're talking about, and given some of the issues you've raised about cities kind of in a bind because of the coronavirus itself. I mean, do you see private ventures coming in and building open access networks? Do you see that being a model? How would Entry Point react to that model? And I'd be interested in Jonathan and Mike's reaction to this too.
Yeah, I think that's a viable approach. I think something that's missing in the incumbent world is a strong focus on the customer and what the customer wants from these networks. And that's largely a product of the fact that it's close to monopoly status. And so it's easy to lose sight of what the customer wants. And, and that's another main point I made in the Medium article is that, if they're essential, then that's a different framework than for profit. And I'm not saying for profit is bad, but I think we need clarity on, is this essential infrastructure, or is everybody okay going forward with this for profit paradigm that we're under right now?
Yeah, we got a question here from Mark. Only last mile plants should be considered infrastructure and treated as utility. Open access should be granted to private service providers on non-discriminatory basis. I guess there's not a question there; it's more of a comment. But I'd love to kind of get Mike and Jonathan in this question. I mean, in some ways, we got a couple questions on the table, right? I mean, there's the government funding question and solving that. There's the open access issue and how that plays into some of these networks, and then this issue of how are we going to get networks built quickly. And Mike, are you actually looking to build networks, or are you looking to partner with those who already build them? And what's the ready.net piece of the infrastructure that we're working in here?
Yeah, we don't build networks. We work with, again, the local ISP who has anywhere from 10 to 20 years of experience building and operating networks, but doesn't necessarily have the sophistication on the software side or revenue management side, and then the sophistication or the bandwidth to access the capital. For us, what I've seen in my experience, capital is a lot more open to dealing, and we talked about this earlier with RDOF, dealing with an existing cash flow and being able to add on top of that. The challenge that you can have with a fresh network or a greenfield network, if you're not expanding off an existing network, is there are no revenues coming in. So you have to ask either debt or equity to suspend belief for anywhere from 12 to 24 months before they see that first dollar of revenue come into the network. Where we have seen that gain traction actually is in the family office space, where they have more control over the dollars. They aren't necessarily beholden to an outside investor who is expecting a return on day one, and they can be more patient. You had characterized them as angels. Yes, they just come with a substantial amount of capital. We have seen success there in raising money, but when it's the more traditional means, they get very nervous about not seeing potential revenue in 12 to 24 months, even though we all know over years 5, 10, 15, 20, they're certainly going to make more than their money back.
Jonathan, what's your reaction to what you've heard?
Yeah, so I want to make an overarching point here, which having to do with how the government spends the public's money. And I'll tell you, when I worked for the government, and I worked for the government for a fair amount of time, and I knew it was the public's money. That's how I viewed it. The major fault of the past decade in the way state and federal governments have spent the public's money is that they spend it on speed. And if you're going to spend something on speed, especially if you set minimum speeds, you know what you get? You get minimum speeds. And the government has spent the public's money starting in 2010 on first less than 4 megabits per second, and then 4 megabits per second, and then 10 megabits per second, and then 25.3. And you know what? It's money spent in the same places for incremental improvements of speed. And the amount, if we were talking about small amounts of money, maybe it wouldn't be as bothered by it as I am. The government has spent $50 to $100 billion of the public's money in the last decade on incremental speed improvement. Here's the one big change, and I really don't know any politician other than some of the campaigns for president that stop spending the money on speed. Spend the money on a transmission medium. Spend the money on fiber. If you spend the public's money on fiber, it costs the public less money. You get a better outcome. Fiber is not only the one transmission medium that gives you the capacity for today, the capacity for the future, that allows you to today deliver 10 gigabits per second to the home under today's GPON technologies, anyway, next generation PON. But it is a better long-term investment. It is less expensive over the time frame that people should think of, which is 40 or 50 years. It is less expensive to build fiber to every single home in the country. And the objective should be, and this is how clearly it should be stated, I would put it to any, the Trump campaign, the Biden campaign, anybody running for Senate. The objective should be, given what everyone has seen over these last months, fiber to every single rural home in the country. That's the only thing we should be spending the public's money on, because it is the best investment for the public's dollars. And we really need to be getting away from whether 10.1 or 25.3 or 55 or 120 or any other sort of metric that people use for speed is the thing you spend the money on, because you end up just spending it over and over and over again in the same places.
Yeah, excellent point there. And you're probably not getting a lot of disagreement from those on this panel. Let me frame the question. I want to take a few minutes. We've got about 10 minutes remaining here to talk a little bit about the CapEx versus OpEx framework here. Okay. And so what I want to say here is that, you've talked a lot, Jonathan, about how the advantage of the RDOF is that it's consistent. It's a 10-year plan. It's 20 billion over 10 years, or roughly 2 billion a year, and that's not, quote, new money. That's just the old USF money that's circulating. So speak about that, the pluses and minuses of being able to bank your business plan around the RDOF versus what could happen from injections of new money, right? I mean, again, in 2009, we had the American Recovery and Reinvestment Act, which put $782 billion into the economy, about $7 billion of which went to broadband networks. Now, $7 billion wasn't much, but it was something, right? And so do you see a huge benefit to a new infrastructure allocation, an infrastructure program, a fourth or fifth stimulus packages as the economic devastation of the pandemic continues to sink in? Or do you think, well and good, I wouldn't turn it down, says Jonathan, but I would rather kind of stick with the steady, regular 10-year process we've got with RDOF, maybe figure out ways to supplement, boost those monies. How would you react to that, Jonathan?
Yeah. For folks that don't know, there has been a bill circulating, at least within the House, uh, as part of the infrastructure, the larger infrastructure that includes 80 billion dollars in rural broadband or broadband funding. That would be on top RDOF funding or all that. And RDOF is just one program out of the FCC. The FCC has, dozens of rural broadband programs. They just go by lots of different names. Could you spend $80 billion? Yeah, you could spend it. You would, if you gave it to me, I'd say, I'll get fiber to every single rural home in the country, and then I'll have 40, 50, $60 billion left over. So I could be, as rich as Mike Bloomberg. You don't need that much money. The reason that much money is generally viewed as needed is because people waste an awful lot of money. And those Recovery Act grants, the ARA grants, BTOP, the BIT programs, I wouldn't spend another dime on middle mile. I'm in rural America every single, day of working. We never need any more middle mile. Last mile. Last mile is what is harder to do. Last mile is where the money has to go. You don't need that much money. I'd say the one sort of innovative aspect of what the House has been proposing is to say, all right, the money that the FCC spends, great, but the FCC doesn't drill down with enough accuracy to, local levels, neighborhood levels, household levels. Let's take whatever the amount is, another 20 billion, 40 billion, whatever it is. Let's allocate it to states on some kind of basis that's, there's plenty of allocations that go state by state that the government has figured out how to do. And let it all be run, though, through competitive bidding processes. Let's stop the grants by political favor. The reason we waste so much money, most of the grant-making processes are done in order to give favor to certain parts of the country, to certain congressional districts, to certain state legislators. You got to make it based on something objective. The most objective way to spend the public's money is to do it through a competitive bidding process, an auction process, although I would turn it from the FCC down to the state level and have auctions done at state level and get the job done. I'll make one last point and I'll turn it over to the rest of you for the rest of the time. Electric co-ops cover 3/4 of the geography of the country, which is why I talk so much about electric co-ops. Doesn't get the whole job done, but you get 3/4 of the job done, you're doing pretty well. There's 2.4 million miles of electric distribution line. Most of those don't have fiber. Most of those in areas that don't have fiber. When you're talking about the scope of what needs to be done, this really does look like the 1930s and the electrification of the country. This really does look like, not tens of, I told you how much miles we build. We're nowhere close to getting 2 to 3 million miles of fiber built in this country. And we build more miles of fiber than any company in the country. We build more than AT&T or Verizon. So this has to turn up to a new sort of scale. It has to be a national objective to get us before the next pandemic, before the next crisis, before the next whatever, to get fiber to every home. That means 2-3 million miles of construction.
And just give us that magic number again, Jonathan. It's not 80 billion, that's too much, but what is the number that you see necessary to fiberize the whole country?
I think including or not included. So total, it's somewhere between 30 and 40 billion dollars. If you say that RDOF is 20, that RDOF is 20, but they'll waste like 10 of it. So you have to tell me what number you're going to waste. You give it to somebody without wasting, it's probably half the amount of money that most people cite. You say 80 billion, it probably takes 30 to 40 because 40 of it is going to be wasted.
Okay.
Now, look, I'm not an anti-government person, but having worked in government, man, it's a wasteful way of spending money, and you can't get away from the waste. Really, I wish there were magic.
Well, I mean, and you've emphasized the role of competitive auctions auctions, the reverse auctions that are part and parcel of the process. So hopefully there's some saving grace from that, right?
Yeah. Competitive auction, so long as what you're identifying to be bid for is fiber to the home.
Okay.
The waste. We had a competitive auction 2 years ago with the CAF too. $1 billion of that was wasted. $1 billion of the $1.5 billion. Guess what's going to happen in a few years? You're going to have to rebuild those very same areas.
Because they're not fiber. Okay.
Yeah.
Mike and Jeff, what are some of your thoughts on this number to build and how we get the job done, right? Jonathan's got a big piece of it, but there's clearly more pieces too.
Jeff, Mike, first, and then I'll jump in.
Yeah, I mean, I think I like everything that Jonathan said. I agree with what he's saying. And I also agree that spending the public money, I'd probably expand it that we've got another digital divide issue in the urban, economically challenged areas. It's a totally different problem and probably a more difficult problem to solve. But in terms of spending the public money, I would confine it to those two places. Everywhere else in the country, people are spending enough money every month to build fiber networks, and we still have a ridiculously small number of fiber in terms of homes connected to fiber. I was talking to somebody this week, and they were telling me that they've got fiber in their neighborhood, but it goes back out and goes back into old infrastructure. So it's not fiber all the way back. And so they basically did a marketing thing to say you got fiber in your neighborhood, and then they've connected it. I don't know if that's true or not, but that's, we need fiber. We need fiber networks to every premise. There's enough money being spent right now by consumers in cities to get that financed if the money's there through an infrastructure fund or bonds or whatever it is. So, I'm hoping that we can make enough progress towards fiber to the premise ubiquitously throughout the country that investors see this as a good investment, a good place to put money.
Right.
I don't know there yet, but I'm hoping we can get there over the next 5-10 years.
I think if we, assume a lot of things away, and it is $40 billion to fiberize across the country, and RDOF is $20 billion. I think private capital providers would be more than happy to step in and provide the remaining 50%. And that would also allow potentially to subsidize fees. Not that private capital likes to do that, but if you have 50% of the CapEx effectively upfront, it takes over 10 years. But if you have 50% of the capital covered, we can probably solve that problem. As a matter of fact, maybe the four of us should get together off the record and determine how to solve it.
Yeah, I just want to be clear. What I was talking about is the public funds necessary to go alongside. It'll cost more than that to get fiber everywhere. But, 20, 30 billion of public funds to get the job done, to get it done once. That's an old idea, spend the money once.
Yeah.
Jonathan, perhaps a final question for you is the role of co-ops in particular. As a vehicle, do you see them being kind of the principal entity in their areas? How do you see co-ops interacting with existing, non-electric co-ops, commercial entities? And do you see any future for co-ops with open access and multiple service providers?
I looked at the open access network, and I'm not going to pick a fight here. I just, when your population density is, 2, 3, 4 homes per mile, you just want to get service out there. There's the way we build networks is the fiber is integrated into the electric network. We believe, as a sort of a fundamental approach, that fiber is necessary for the electric networks of today and the future, for smart grid, for distributed generation, for managing all of the electric needs of electric vehicles to come. So we build in a very specific way. It doesn't lend itself to working with sort of non-electric utilities because we're building fiber networks that are part of the electric network. And then the excess capacity is used to provide broadband services and telephone services and entertainment services and the rest. Co-ops are a really big piece of rural America. But just as Jeff was saying, the other issues around what municipalities would do or what cities would do, I mean, we don't touch that at all. Co-ops by definition are outside of towns, outside of cities, in rural areas. But it's a big solution for rural America, in part because of the way in which co-ops were formed, the way they have been managed over the last 80 plus years now. They are locally owned. They're locally controlled. They're, democratic institutions, small d, democratic, and they keep the sort of the constructions, what I said at the outset. If you wanted economic stimulus in a rural area, and start a construction project where you're building fiber to the home. You get all the people in there who are building the network, and then you get the necessary infrastructure for those communities to have education, healthcare, work, resources for the future. But as a boost to the economy of rural America, spend money quickly in building these kind of networks. It's local money. It's nothing that can be exported. It's nothing that's going to come in from overseas. It's jobs, and the people who are on those construction projects, they take their money and they spend it on grocery stores and then bars when the bars reopen and everything else.
Well, that will have to be our last word. I appreciate Jeff and Jonathan and Mike being with us. Don't forget to join us next week, Wednesday at 12 noon. We're going to be talking about the techlash and how the coronavirus has impacted or should continue to impact the techlash. Thank you again. And I just want to remind you that while we've talked a lot about infrastructure today, we're also equally committed to talking about the apps and the uses enabled by these networks. And that's again, part of what we at Broadband Breakfast are all about, better broadband, better lives, making sure we have the capacity, but we also make good use of it. So until next week, I'm Drew Clark, and we'll see you later. Bye.